Um,
All right. Good evening, everyone.
yeah, good evening, David.
Okay. Yeah. Good evening, guys. My name is David Apaflo. I'm a chartered accountant, also a chartered tax practitioner. I have about 18 years of experience, and I think this is my second time in the Risevest Investment Club. The last time we were speaking on topics around bookkeeping, and I'm glad to be here this afternoon to speak to members of the club on issues relating to the new tax laws in the country. So, thank you for having me.
Thank you, David. Thank you for taking the time to be here. Nice to have you again. Omolara, over to you. Are you there?
Yes, good afternoon, everyone. My name is Omolara Laleye. I'm a senior manager with Deloitte and Touche. I have over a decade experience in providing tax advisory and compliance services to employers of labor, to individuals, to high net worth individuals, and I help with tax planning and restructuring. And I'm happy to be here to share knowledge and insights on the new Tax Reform Acts and how it's going to affect each and every one of us as individuals and as employees of organizations. Thank you.
All right. Thank you, Omolara. Thank you for taking the time to be here. Nice to also have you in our community today. So we can start this now. So it's going to be 15 to 20 minutes per question for each of our guests, so they can take their time to run us through what's new in the new tax act. So I think I'll go with you first, Omolara, since we are starting with personal income and salary earner. So many of our members here salaried professionals, some are also freelancers, and some of them have been asking what's changing in this 2026 under this new tax act. So could you explain the key changes, especially with examples on how the new tax rate directly affects um, people's take-home income and any requirements in terms of compliance we can be looking forward to? So everything new that concerns um, the salary earners on this new tax act. So just you have the floor for about 15 to 20 minutes. All right.
All right. Thank you, Victor. And just to mention that the tax reforms, act this 1st of January 2026. And I'm sure a number of people have received their January pay slips and are wondering what's happening. Some people are saying my taxes have gone higher, some people are saying my taxes have gone lower. What's the reason? So we'll just try and break down the changes that have occurred between what used to be in place under the Personal Income Tax Act and what is currently in effect under the Nigeria Tax Act now. As employees or as individuals that earn income, one major thing that we need to take note of is the fact that the new tax act has introduced a concept of residency. The concept of residency is not new, but now it's been embedded into the act, right? Where the tax law is saying that as an individual, where you're considered resident in Nigeria, you're liable to taxes in Nigeria on your worldwide income. And I'm sure the question that will come to people is, okay, in what instances am I considered resident in Nigeria, right? Where you're living in Nigeria, right? You're earning income, you're working in Nigeria, you're living in Nigeria, you're domiciled in Nigeria, you might be considered resident in Nigeria. Where you have an habitual place of abode, so you have a permanent home in Nigeria where it's always available for your use, you might be considered tax resident. Where you do have substantial economic and immediate family interests in Nigeria. So you might say, okay, I don't stay in Nigeria for a long time, but you have businesses that you're running in Nigeria. Your family, that's your immediate family, is based in Nigeria. In that instance, you'll be considered tax resident in Nigeria and taxable on your worldwide income. Now we have people that are remote workers. You say that, okay, you do remote work, probably you're working for an organization that is based in another country, in the UK, in US, Dubai, wherever, but you're working from Nigeria. this introduction of the concept of residency is also to ensure that people like remote workers are also captured in the tax debt. So you might say, oh, my employer is not in Nigeria, so my employer probably doesn't have an obligation to deduct taxes and remit to the tax authorities. But what this new tax act is saying is that the fact that you're domiciled here, you're living in Nigeria, you're based here in Nigeria, you should be paying taxes here in Nigeria, even though your employer is no resident in Nigeria. So that's one important thing to note. And next, you might say, okay, so what has changed? A lot has changed. There's so many news all over and on social media that, okay, as an individual, am I paying more taxes? Am I paying less taxes? What can I do to manage my tax obligations? First thing that we need to know is that as employees or as individuals, what this new tax act has said is you're taxable on your worldwide income, so income that you earn from your employment. If you're doing a trade or a business, you're liable to taxes on that income. Your investments, right? So a lot of us do investment. You know, that is taxed at it's a front investment income, so it's liable to taxes. So you're taxable on almost every income that you earn. But it's important to know that there are still some exemptions, in as the tax laws have said that you're liable to tax on your entire income. There are still some exemptions, like for instance, if you invest in government bonds, those are exempt. If you're being paid gratuity by your company, so you're retiring, the company is paying you a lump sum gratuity, that is an exempt income. You are probably a retiree. For people that are retirees, that's on a monthly basis, they just get their pensions, right? This tax laws is not expecting you to pay taxes, so you are exempt from taxes. You're exempt from taxes. If you're a minimum wage earner, so for people that earn the minimum wage in Nigeria now is 70,000. So if you earn minimum wage on a monthly basis, you're exempt from taxes, right? One thing that the president of the Tax Reforms Committee has kept saying is, oh, the new tax law is pro low income earners. So the idea is, okay, low income earners should pay less taxes and high income earners should pay more or contribute more to the tax bracket. So if you're a minimum wage earner, you're exempt from taxes under the new tax law, so you do not have to pay taxes.
Hi,
Right?
Omolara. Are you there? Sorry
Yes,
to
can you hear
cut
me?
you. Yeah, but I think your audio is a bit laggy or kind you have like a scratchy thing going on. I don't know if it's just me,
Oh, apologies.
but
Is it better now?
can you can you try and like just say a sentence probably like, just to get a
Hello, is it better now? Can you hear
okay.
me?
Yeah, it's better,
Okay,
It's
thank
better,
you.
it's better. All right.
All right. So I was saying that as an individual, there are certain incomes that you earn that are still that are exempt from taxes, in as much as the law has tried to bring in all sources of income or every income you earn into the tax net, right? Saying that, oh, all your profit or gains from a business is taxable, your salaries, your benefits that your employer provides taxable. In fact, one new thing that the act has introduced is saying that profits or gains from sale of digital assets is also taxable. So people that do invest in crypto and all of that, what the law has provided that any gain you make from such transactions are also taxable. But in the same vein, there are things that you can invest in that are exempt from taxes, right? Such as the federal and state government bonds. Those are exempt from taxes. If you have investments abroad and you bring them in through the official channel, like you have investments, dividends, interest that you earned abroad or in another jurisdiction, and you bring them to Nigeria through the official channel, those are also exempt. Pensioners, you are exempt from paying taxes if all the income you're earning is just from your pension. The government is not expecting you to pay additional taxes. For people that earn minimum wage, you're exempt from taxes as well. You're not expected to pay additional personal income tax. And for people in employment as well, when you get paid your gratuity at the end of your service year, the tax laws have provided that gratuity is exempt from taxes, right? So we've talked about so many incomes that are taxable, incomes that are not taxable. Now, how can you manage your taxes as an individual, right? How can you plan your taxes in such a way that you pay the barest minimum taxes, right, within your control? The first one thing is a new introduction by the Reform Act is something called the rent relief. A rent relief is the authorities saying that if you do pay rent in Nigeria or you stay in a rented apartment, we would grant you 20% of that your annual rent paid as a tax relief, right? So we grant you 20% of that annual rent paid as a tax relief, subject to a maximum of 500,000. So it means if you're paying rent, you can provide that evidence of rent payment to your employer so that you can claim that rent relief and reduce your taxable income. Remember, we have said that almost everything that is being paid to you when you're in employment is taxable, but there's a way you can reduce it, and that's through all of those reliefs and deductions that are available. And one is the rent relief. So if you're paying rent, you're staying in a rented apartment, you need to provide your rent agreement, rent receipt from your landlord to your employer so that you can get that relief of 20% of the annual rent paid, subject to a maximum of 500,000. So it means that if you pay 2 million rent, you get 400,000 annually as a tax relief. If you pay 3 million rent, the maximum you can get is 500,000 because 20% of 3 million is 600,000, which is above the maximum threshold. But no matter how little this relief is, it's still something that can be used to reduce your taxable income. Also, it's important to know that where you get mortgage from the bank or from a mortgage institution to develop your house or to buy a house that you're going to live in, the interest that you're paying on that mortgage is also a tax relief. So you can present your loan schedule, the loan agreements that you've obtained from the financial institution, and give it to your employer so that the interest that you're paying on a monthly basis can be used to reduce your taxable income. In the same vein as well, where you take up life insurance on yourself. So you can decide to buy a life insurance policy, an annuity policy on your life or that of your spouse. And the annual premium that you're paying can be used to reduce your rent. In fact, I had an instance where a client, by the time he ran the tax computations of what he will be paying under this new tax law, and he saw he was going to be paying way more. One thing he decided to do was he just took 2 million naira. He took an annuity premium where he was paying at least 2 million naira on a monthly basis, so that at the end of the day, he was able to achieve so much tax savings that the taxes he was paying on a monthly basis under this new act is much lower than what he was paying under the old act. So that's also a way to plan your taxes. Take up a life insurance, take up an annuity on your life. The premium you're paying can be used to reduce your taxable income. We also have contributions to the pension scheme. I'm sure we're all aware, or we all have an idea of the pension scheme, where if you're in employment, it's mandatory for your employer to contribute. It's mandatory for your employer to contribute to the pension scheme. So that's your bit of the contribution, your 8% contribution is a tax relief. But also, as an individual, you can decide to put in more money into your voluntary contribution. So aside from the 8% that your employer is mandated to remove, deduct, and remit to your pension account. You can tell your employer, oh, I want to contribute an additional 5%. I want to contribute an additional 50,000 monthly to my pension scheme. And that additional contribution that you're making is a tax relief. And let's not forget, under voluntary contribution, yes, you can contribute it, but after a certain time, you can go back and withdraw your money. So, and it's going to be tax-free at the point of withdrawal, right? So that's also a method of planning your taxes. For people that do decide to contribute to the National Housing Fund, the National Housing Fund is a scheme that where individuals can get loans at very low rates, at single digit rates. So you have to make monthly contributions to the National Housing Fund scheme. So that monthly contributions that you're making to the scheme is also a tax relief. It can be used to reduce your taxable income. So this and so many more are other things that as individuals we can use to plan our taxes. We can use to reduce our taxable income. Now, going into the major changes, what is expected of us as individuals in light of the new tax law? One is if you are paying rent, remember to present your rent receipt, your rent agreement to your employer so that you can claim that relief. Because now we no longer have the consolidated relief allowance. Under the old law, we used to have a generic 20% relief plus either 1% or 200,000 that is granted to everyone annually. So that 20% was tax-free. But under this new law, that's no longer applicable. So tax planning is in each and every one of our hands. We need to take tax planning seriously. So if you're paying rent, present your rent relief to your employer. It's also important to know that under this new tax law, the tax rate has changed drastically, right? What the reforms committee have tried to do is make the tax rates more progressive. So under the old law, the rates used to range between 7% and 24%. And at the end of the day, the maximum effective tax rate that any individual can pay is about 19.2%. But under this new law, the rate is ranging from 0% to 25%. With your first 800, so under this new law, the first 800,000 you earn will be taxed at 0%. However, it's so much more progressive that the next 2 million you're earning is at 15%, 2.2 million is at 15%. And anything you earn above 50 million is taxed at 25%. So by the time you run this new tax rate, you would realize that your effective tax can be as high as 24% compared to the 19.2 that you used to receive, right? But it's not all gloomy, because you can say yes, oh, the tax rate has increased. Before the maximum was 24, now it's 25%. But if you do run the tax rate, you would see that people that do earn less than 25 million under this new regime, they'll be paying lower taxes. So at the end of the day, you're going home with more money. And then if you even now decide to, take your tax planning seriously, you put in your life insurance, you do voluntary pension contributions, you can even be paying much more lower taxes. While people that are high income earners that earn above 25 million naira per annum, you see that the taxes that they will pay under this new regime would increase, right? And that's just aligns with one of the mandates of the reform committee to ensure that the high income earners are contributing more to the tax net. Okay. And also just to mention that under the new tax laws, it's mandatory for everyone to register with the tax authority and get a tax identification number, right? So for the purpose of your taxes, for remitting taxes, for the purpose of certain transactions that you won't be needing with the bank, it's important for everyone to register for your taxes. So once you're considered tax resident in Nigeria, you live in Nigeria, you're domiciled in Nigeria, you spend most of your time or more than 183 days in Nigeria, you're considered resident, so you need to register for taxes. The good thing is that one of the reforms is that they've introduced Joint Revenue Board tax identification number. It means that you could just go on the Joint Revenue Board site, and using your NIN, you can retrieve what your tax identification number is. or you register for a new tax identification if you don't have one in their system, which is really going to make tax administration easier, because under the former laws, what we had was in each state you're resident, you need to register with that state and get a tax identification. So for if you're resident in Lagos, you pay taxes to Lagos State, so you have to register with Lagos State to get a tax identification. If your company decides to move you to Ogun State, you need to register with Ogun State for a different tax identification. If you go to Abuja, you need to register with Abuja Internal Revenue for a tax identification. But with the tax reforms, it's making it easier by harmonizing the different tax identification that the different states have issued to say, you know what, we're going to have just one unified tax identification number, which is the one issued by the Joint Revenue Board. So even if you move across states in Nigeria, it's the same tax identification you have at the end of the day. And that is really going to make tax administration much better. And also, just to mention that another good introduction by the Act is the increase in the threshold, in the exemption threshold for compensation for loss of office. So under the previous law, where you get compensation for loss of office, where probably you were made redundant and the company had to pay you a lump sum just to compensate you for being made redundant. Under the old laws, where the amount was more than 10 million, you pay tax on the amount above 10 million, right? So if you are being paid 20 million as compensation for loss of office, you have to pay 10% of the additional 10 million as taxes. But under this new law, they've increased that threshold to 50 million. So if you're paid a compensation for loss of office up to a maximum of 50 million, it is totally exempt. But once it exceeds 50 million naira, then you would have to pay taxes under your Personal Income Tax Act. Now, just to go straight into the obligations that is expected of us as individuals who as employees under the new law, everyone is expected to file their individual tax returns. So yes, we know that our companies deduct payee taxes and remit to the tax authorities on a monthly basis. But you as an individual also have an obligation to file your tax returns with the tax authority. Now, why that is important is because your employer has visibility only to your employment income. But as individuals, we have so many other sources of incomes. We have investments, some people have side hustles, businesses. So that individual tax return is where you declare that for the whole year, this is the income I've earned, and these are my expenses as well. Because it's important to note, and just to mention, you're not going to be taxed on inflows in your bank accounts, right? As an individual that is running a business, you're taxed on the taxable profits from that business. So don't be scared to say that, if I declare my income now, the tax authorities will come and tax the entire income. No, you declare your income. You also declare the expenses that you've incurred in generating those incomes, right? And that is a mandatory obligation under the new law. So while this new act has not put a deadline as to when this individual filing is due, based on the old laws, the deadline was 31st of March every year. So 31st of March 2026, I will declare to the tax authorities the income I earned in 2025. So it's important for us to do that to ensure we're declaring our returns. And that's because more increasingly for the different states, it's even mandatory. Before you can get a tax clearance certificate, you need to declare your individual tax returns. So we can take advantage of the fact that, okay, I know that my incomes are taxable, but you also have other non-taxable incomes. You have some investments that are exempt, right? You declare those, but you also declare the expenses that you incur. So for example, you run a business, you generated a total revenue of 50 million naira. But in the same vein, you incurred costs to generate that income. You were paying rent, you paid staff costs, the cost of goods that you bought or the cost of rendering those services, those are all considered. So it's important to declare all of that. And at the end of the day, you might even end up in a net position where the tax authority probably have to give you a credit. I've seen those instances happen. So just to round up, it's important in this new era, in under the new tax laws, it's important that each individual takes their tax planning seriously. As families, if you realize that one spouse earns more income than the other, and it would probably be better for the other spouse that earns more income to claim the rent relief, you can adjust the way, speak to your landlord, maybe the receipt should not be in the name of the other spouse that earns more. um Try and invest in life insurance scheme, your voluntary pension. If you contribute to NHF, those contributions to NHF, you can utilize them. Also, keep track of your expenses. If you run a site, also keep track of your expenses. You incurred costs in fueling the car to go and deliver goods. Keep those expenses, because when you declare those expenses, the onus is on you as an individual to prove that indeed you incurred those expenses, for the tax authorities to be able to grant those deductions. So it's important for each and everyone to keep records and to get planning seriously. And yes, I hope that I've been able to communicate like the few changes as they affect us as individuals or as employees. Be happy to take questions at the end of the session. Thank you, David.
Thank you, Omolara. That was very, very insightful. Yeah, you were able to communicate a lot. I mean, questions have started coming in already. We're going to take that at the end of this call, by the way. It was very helpful, especially I like the way you broke down. I mean, most of what is happening and what's changing in like practical terms. So just to move on, so David, over to you. So some of our members, I mean, the first angle was to target personal income, so salary earners basically. So, but some of our members here also run small businesses, large scale corporations, and even some run side hustles. So, what are the main updates in these tax acts that affect business operations, compliance, and how to just basically start planning for tax for this year? Over to you, David. So for the next 15
Okay.
minutes.
All right. Thank you very much once again. So, Lara has done a very good job of, chronicling, where we are with respect to personal income tax, and I'll try and give, more context for the companies. So I think from very first standpoints, right, one of the biggest things I think that we need to acknowledge for businesses is that there is what we call the harmonization of the tax laws. So before now, we had several laws where when you start business, you are worried because you don't even know whether you have a list of all the laws that you need to comply with, right? So, but what these new reforms have done is that they has codified all the criteria that have to do with taxation into one document called the Nigerian Tax Act, right? And that on its own brings some more certainty, to business owners. You know that if I know that this document says I'm supposed to comply with, it gives me more certainty and it reduces my risk because I'm sure that if I'm complying with it, then there's nothing else that is lurking in the corner. So consolidation of the tax laws is one very big change and benefit that we're seeing from these tax reforms. Another one that is very big and critical is that before now we had a threshold for small companies defined as any company that is doing revenue of 25 million naira and below. So when we say revenue, that's your sales, so not your profits. So before now, if you're doing 25 million and below, you're classified as a small company. And so we had three categories. We had the small, we had medium, we had large. And so small was 0 to 25 million. Medium was above 20 million but below 100 million. And large was 100 million and above. What the new laws have done is it has increased the threshold from 25 million to 100 million. So now if your business is doing anything between 0 to 100 million, you're seen as a small business. And of course, if you're doing more than 100 million, you are not seen as a small business. And the implication of that is that the tax rate, that you're supposed to pay on your income is 0% if you're a small company. And so it has brought a lot of respite to businesses. But we also need to clarify clearly that when you set up your business, there's a difference between a business that is set up as a limited liability company and one that is a business name. From the provisions of the law, it is clear that the exemption is companies' income tax. So it means that companies are likely to enjoy this sort of benefit. Also, based on that threshold, there are certain exemptions with compliance with value-added tax and even withholding tax, withholding tax regulations, which are basically the tax compliance burdens that small businesses have had to deal with over time. So, if you're a small business, less than 100 below, and the invoices you're dealing with are less than 2 million naira, provided that on that invoice there's a tax ID, you are exempted. You don't bother yourself with charging with. So what the government is trying to do is to make the business environment very simple and such that businesses can focus on growth. And when they grow, it is then the seeds of that enterprise. Sorry, it's then the fruits of the enterprise, not the seeds of the enterprise, that are taxed by the government. So that's one. Another thing in the tax act is, as much as the tax right now for companies that are doing it more than 100 million is 30%. There's a provision in the tax law that allows that tax rate to reduce from 30% to 25% once the governors and the presidents agree. And so I am very positive that we should see that in the coming months, where they agree to reduce the tax rates from 30% to 25%. So there's that potential coming in the works. There's also introduction of development levy. Before, people are familiar with filing their company's income taxes, would have seen things like education tax, would have seen things like Naseni levy, seen things like police trust fund levy, and so many other things. Levy. So what the government has done is to say, what, instead of collecting these many taxes, let us just collect one that will be shared among all these organizations. And so there is now what we call the development levy charge at 4%. So of course, by the time tax rate drops from 25 plus 4, you're roughly at about 29% in terms of taxation. I also want to be clear that when we are talking about this tax rate being applied, it is a rate being applied on your profits, not on your sales. It's important for us to get that clearly. It's tax applied on your profit, and profit is obtained when you say your revenue minus your cost. That is what gives you your profit. Of course, in tax, we make some adjustments for capital allowance, loss relief, and the likes in that case. There's also a very important part, the fact that now, when it comes to value-added tax, there's a wider range you can claim as VAT. So many of us are familiar with VAT, the value-added tax. The tax laws retained it at 7.5%. But a significant change that they made is that you are now allowed to claim a lot of input on your expenses and even the fixed assets. Before now, businesses could not claim those input VAT, especially if you were a service business. So what the law has done is that it has made it easy, such that as you collect VAT from your customers, we call it output VAT, and you also, as you're buying your inputs, you're buying your assets to do your business, you're paying VAT. The government allows you to offset the VAT you suffered when you were buying your fixed assets and paying for your expenses off the one you collected from your customers, and it is a net difference that you then pay to the government. So it's something that we should expect to see improve cash flow for a lot of businesses, considering the fact that they are now able to claim a wider range of input VAT. Another key change that we're seeing is the introduction of VAT fiscalization. So the law mandates that businesses must link up to the Nigerian Revenue Service e-invoicing portal, such that as you are issuing invoices to your customers, the Nigerian Revenue Service is seeing those invoices real time. So it's leaving your system, it's going to the NRS portal for validation before it goes to the counterparty you are dealing with, and such that they have a track of all the transactions going on. The impact of that is that at the end of the year, when each person comes to claim their expenses, it will be easy to say, okay, we can see these expenses on the system. and you paid for them, we can claim it as an allowable expense for you. So I know in recent times we've seen a lot of businesses, sending out notices to customers that they are now charging VAT and the likes. And what I always say is, also hold them accountable. If you are charging me VAT, give me an invoice, that I can verify on the Nigerian Revenue Service portal as one that has the really taking note of the VAT that you've paid on that transaction. Another thing that has also changed or that has been introduced, I think Lara mentioned it, is the harmonization of tax IDs. The fact that we're no longer going to be having 36 or 37 tax IDs, we are now going to just have one tax ID. The work on that is still work in progress. There's a lot of glitches here and there, but for us to harmonize with all the states is in progress. Changes to the capital gains tax. Before now, we had a definite capital gains tax rate, and it was 10%. So when you invest in things like land and buildings, stocks and shares, bonds, or even crypto, um, that was looked at as a capital gain, and those they are just income, and the tax on that will be based on whatever tax bracket you are in. So if you're in a 0% tax bracket, pay 0%. If you're in a 30% tax bracket, you pay 30% as it relates to companies. For individuals, it would flow based on where your rate is in the graduated table and the graduated tax table. With respect to other changes in terms of taxpayer rights, the law enforces more around taxpayer confidentiality, the confidentiality of taxpayer information. There are now fines and sanctions for anyone who leaks taxpayers' data. And then there's also a big provision for the tax ombudsman or the tax ombuds, which is basically a system to help to defend or arbitrate between problematic issues between taxpayers and the relevant tax authorities. So when you have taxpayers issues that they are unable to resolve, or they feel like they are being treated unfairly, the law now provides for them to approach the tax ombuds and say, this is my case, and the tax ombuds can then step in and attempt to arbitrate situation, before things escalate to either the courts or the appeal tribunal. So that's just a high level of some of the changes that that we have seen. There are a lot more, but we can't cover all of them in a session like this, and some of them also have a lot more detail and rigor to it. There are things around the economic development incentives, changes in the free zone laws, changes in capital allowances, and other details that we might not be able to cover today. But that's just a high level summary of what is changing and how it will affect businesses going forward. Thank you.
Thank you so much, David. That was very, very insightful. Even from when you were already giving some of those insights, people were already dropping their questions that are relevant to what you were saying. So just because of time, because I go straight to questions. So the first question here is, for individuals who already registered tax promo for their businesses, do they still need to get a tax identification number? Um, who wants to go for that?
Okay. Do I come in now, Victor?
Yeah, sure. Just like a minute,
Okay. For
because there
for
are a lot of questions.
individuals, for individuals who have businesses, limited liability businesses that have been registered with Tax Pro Max, it's important to know that as a registered business where you have a limited liability company, the business is different from you, the owner, right? So it's the business that has registered on Tax Pro Max and has a tax identification number. You, as the owner, also need to have your own tax identification number, because the tax obligations of the business is different from you as an individual. As an individual, you still need to also file your tax returns. Yes, the business is filing its tax returns, but you also still need to file your tax returns, because in the law, in the eyes of the law, the business and you are two separate people, right? This is different for people that their business is registered business name or sole proprietorship, right? In that instance, both the business and the individual are seen as one. So just one registration is important. Just one tax ID is important. But if you have a limited liability, yes, you as the owner still needs to register for your tax identification number.
All right, thank you, Omolara. Second question. So Chiamaka is asking, so how do we get the unified tax ID from the Revenue Board?
Sorry, Victor, your line was breaking.
All right, is it clear now? Is it better now?
Yes, it'd be better.
Okay, so Chiamaka is asking, so how do we get the unified tax ID from the Revenue Board?
Okay, so there's a link, taxid.nrs.gov.ng. I'll probably drop it on the chat box. So when you click on that link, you just need to put in your NIN, and then it would retrieve your tax ID if it has already integrated. Probably you've registered, it has integrated that. Otherwise, it will generate a new one for you.
All right, thank you so much. We have another question. So how do I, HCM is asking, so how do I file a tax obligations if I earn income from other states while resident in a particular state? So it's asking if he is any income from a certain state, from a particular state, how does he still remit income to the state where he's resident in?
Okay, if I got the question, it says if he earns income from a different state, how does he file his tax returns? So as an individual, you're resident in the state where you live, right? So if you live in Lagos State, you're liable to pay taxes in Lagos State. If you live in Ogun State, you're liable to pay taxes to Ogun State Internal Revenue Service, right? So if you live in Lagos State, you're expected to declare your entire income, your worldwide income as is expected, right, to Lagos State government and pay taxes to Lagos State government, irrespective of the fact that probably you have a farmland or you have an investment property in another state where you're getting rental income. So far, the states that you are deemed tax residents as Lagos State, then you're expected to file your tax returns in Lagos State and pay taxes to Lagos State. The expectation is not that you pay to Lagos, then you go to Ogun State where you have your farm or landed property to pay another tax there.
All right, that makes sense. Okay, HCM, I think David just answered your question. Now I'm just going to go to Innocent. Okay, even Innocent's question, I think Lara, you kind of explained this in the beginning, but probably wasn't here. So he's asking, Innocent is asking, does the tax apply to non-citizen?
Does the tax apply in?
Apply to non-citizen.
Yes. So, well, if the non-citizen is considered resident in Nigeria, yes, it would apply to them. So it's possible to have someone that is not Nigeria come into Nigeria, spend 183 days in Nigeria. 183 days is roughly 6 months. If that person is spending 6 months in Nigeria, that person will be considered resident in Nigeria and liable to pay taxes in Nigeria, right? In a different vein as well, if that non-resident is working in Nigeria, performing the duties of employment in Nigeria, right? And this non-resident person or non-citizen is not liable to pay tax in maybe their home country, right? Or in another country where they are deemed residents. They are liable to pay taxes in Nigeria. So the tax law is all encompassing, irrespective of your citizenship, right? So for your determined residents in Nigeria, you're expected to pay tax in Nigeria.
All right. Thank you for that. So, wow, Chiamaka, you have like 3 in 1 question. So the first one, for small business, I think this is for David. Okay, for small business below 100 million naira, it's a business name. They do not enjoy exemption unless they are registered as a limited liability. Um, Hi, David. Are
Okay,
you there?
so
I mean,
yeah,
okay.
I'm here. Can
All
you
right.
hear me? Yeah,
Yeah, yeah.
the exemption is an exemption from companies' income tax, and since only companies pay companies' income tax, it will mean that business names might not get that same exemption. So that's it.
Okay, okay. Thank you. Um, okay. I'm just going to go to another person so I can touch. Ty is asking for the tax reduction. Okay, question for Malara. For the tax reduction options, could you clarify their downward, what their downside is? E.g., buying life insurance or taking a mortgage could mean lower taxes, but also mean lower take-home pay. So let me take it again. So for the tax reduction options, could you clarify what their downside is? For example, buying life insurance or taking a mortgage could mean lower taxes, but also mean lower take-home pay.
Um, well, yes, at the end of the day, right? If you do so when you're paid your net salary at the end of your net pay at the end of the day, right? You decide what you want to use that income to do. But if you do decide to take up a life insurance where you're paying a monthly um a monthly premium for that, or quarterly or annually or whatever the case may be, it's an expense that you've incurred, right? But at the same time, you know that that expense is going to pay you in 2 ways. One, you get a tax reduction or a tax relief for that premium you're paying. And you know that at the end of the life insurance premium, or if it's an annuity that has years tied to it, at the end of the day, you still get a return on a return. So it's, and a life insurance is more like an investment, right? Because you're putting in your money there for a certain period of time, or maybe till you pass away for your children. At the end of the day, you get that money you've put in plus interest and returns, which are not going to be taxed at the point of payout. Right. So yes, you might say that, okay, your disposable income at the end of the day is going to be reduced, but it's also kind of like an investment, because at the end of the day, you're still able to get your money back, or your beneficiaries are able to get benefits for that investment that you've made. Same thing with your mortgage, right? Um, yes, your at the end of the day, maybe you've put in your disposable income into paying a mortgage or paying a house loan, right? But you have the benefit of your house at the end of the day, and at the same time, you're getting that relief. So if you compare this to using outright cash to have bought the house, if you had used your outright cash to buy the house, you don't get a tax relief for that cash payment that you made, right? But what the tax authority is saying, okay, if you took a loan, that interest you're paying, you get a relief for it. So it's always a give and take. So one just has to sit down and do a cost benefit analysis that, okay, what pays me at the end of the day.
All right, that makes sense. Deluxe is asking, so most emphasis is people paying rent for relief. How about those who do not pay rent and earn like 100,000 naira monthly, which is invariably above the threshold? How is this computed, and how does it affect or benefit this individual?
I'm not sure. Okay. So I'm not sure I got the question. It was breaking.
So 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 he's asking that how about
Where
those
an
who do not pay rent?
those who do not pay rent.
Yes. I think it's related to the rent relief. He's trying to understand. I mean, he or she is trying to understand when you were explaining about the rent relief. So he's asking towards that those who do not pay rent and earn like 100,000 monthly. How is this computed and how does it affect or benefit this individual?
Okay, so the rent relief is only available for people paying rent. So if you're not paying rent, unfortunately, you can't get the rent relief, right? So it's only available for those that are paying rent. So you need to be paying rent to get the rent relief. Now, if you're earning like 100K, you don't pay rent, probably you're staying with a family and friend, that 100,000 is above the minimum tax, right? The minimum wage, rather. So you would pay tax on that 100,000 you're earning monthly. If you're an employee, your company is expected to even have deducted taxes because employers have the obligation to deduct taxes from employee salary and remit directly to the tax authority. So your employer is expected to have deducted those taxes and remitted to the tax authority on a monthly basis, right?
All right, all right. Um, so I think I'm just going to take this question. So I think this is for Davis about the VAT he was explaining the other time. So Tosin is asking, I would want some further clarity on VAT. If I'm a salaried income earner and I do a small business of selling clothes online, will I remit VAT on that side also if I generate more than 50 million naira? Or I must pay VAT regardless of the income so far the said goods attracts VAT?
Okay, so I think the first thing is, to determine how your operation is structured. If your operation is structured under a business name, that business name will be, you need to register with the Nigerian Revenue Service and then begin to charge VAT. But if you are doing it as a personal trade, as an individual, you might not have that obligation, to register and deduct that. So we need to understand, how your business should be structured as a business name or structured as a limited liability company, right? You then the next question would then be, is my revenue less than, sorry, maybe let's, before we even look at the revenue, we look at the product you're selling, right? Is the product I'm selling a vatable product, meaning is it a product that is not zero rated or is it a product that is not exempt? Now, if it doesn't meet any of those criteria, then it means that you should be charging VAT. After that, we now apply the filter of, okay, I should be charging VAT, but am I a small business or not? Now, if you qualify to be a small business, then you're not required to charge VAT. Now, also, if you're not charging VAT, there are disadvantages to that because you might also not be able to claim your input VAT. So some people who are not required to charge VAT might voluntarily write to the government and say, see, I want to be able to start charging VAT and so that I can claim my own input VAT. So the government allows for you to do that. Also, even if you are not required to charge VAT, but you charge VAT, remember that the VAT is government's money. You are required to remit it. So the law is not expecting you to charge it, but in any case where you charge it, the law is expecting that you remit it.
All right,
Thank
all right. I hope that answers your question. So since we are still on you, David, I think this will be the final question. Yeah, because of time. So Tukali is asking, I want to know more about the compliance filing for limited.
The compliance time.
Filing for limited, I don't know what that means. I think when you mentioned something about liability company, how compliance work for them.
So whoever asks this question, you can just put more details in the chat box. I'm still
Yeah,
moving around for a
okay.
couple of minutes and I'll be able to answer that within the chat.
All right. So who wants to should we, I think we should have just someone talk to ask a question and then we just wrap this up. Who wants to be that lucky person? Okay, Kacha raise up his hand first. So this will be our final interaction. Then after this, we just wrap this up. So Kacha, just granted you access to speak. Please, 30 seconds. Please. Thank you.
Can you hear me?
Yes, I can hear you.
Okay, yeah. So I'm not quite sure who will answer the question, but for the individuals, the question I have is, when is the deadline for individuals filing their tax returns? That's all. Thank you.
Okay. So for individuals, under the Nigeria Tax Act or the Nigeria Tax Administration Act, the deadline for filing the tax returns was erroneously deleted at the point of harmonization. However, under the previous law, that deadline was 31st of March annually, right? So best practice is still to stick to that deadline of 1st of March annually. So as an individual, when you're filing your tax returns, you can file your tax returns declaring all your income and your expenses or your release at that point in time. And maybe just to take one question that I see in the chat box saying that, oh, if you work remotely, your employer is not in Nigeria and things like that. It means that as an individual, then you need to account for your taxes yourself because your employer is not in Nigeria, so they can't deduct and remit the pay taxes. So you need to account for your taxes by 31st of March. Declare your entire income, declare your rent relief, your reliefs that you have, if you're contributing to pension voluntarily, declare all of those reliefs that you have, and then you can file your tax returns.
All right, thank you, Omolara.
Thank you.
Kacha, does that answer your question? I hope it does.
Again, it does and it doesn't, because fine, yeah, 31st of March, I know, but if we don't have an actual date in the law, and I think the old laws are no longer in force. Well, yeah, they've the old laws are no longer in force. I'm guessing they will amend the law eventually to specify the actual date, but for now, I believe, well, I may be wrong, but there isn't exactly I know the deadline for employers is today.
31st January. Yes, that's still
Yeah,
in the law.
for employers, for payee tax is today. But for me, okay, all right, thank you.
All right. This is a 1 hour conversation, and we cannot take as much as we can, but we try to at least touch on the most important, which is on the personal income side and on the business side, because we know at least majority of people are either salary earners or on the other end side also small businesses. But I hope this was very insightful. I hope it gave you more clarity, and we've come to the end of this session on the topic what the Nigeria tax has mean for your finances in terms of your personal income and your businesses. So there's still a lot of questions, but we've come to the 1 hour mark, and we don't want to go past that to respect your time and also our guest time. Thank you very much for tuning in early, and for everyone that tuned in early, thank you very much. And also for people that are still listening, we also appreciate it. You could be doing a lot of other things, but you took time to be here to learn how to manage your finances better this year. And again, it's also something that's very, very important, considering the fact that, as you grow your money, you also want to know how to manage it better. So you can, and one thing about learning things like this is it helps you mitigate or plan things ahead. So some things that would necessarily just happen to you just by a shock or just because you didn't do a little bit more research. Because now you have this information, you can plan ahead, and that's why we do this. The guys, we are no more taking any questions for those raising up your hand. So this is Rise Investment Club. We do this we host like an investment club meeting every last Saturday of the month, and watch out for our next month's topic. You can also stay tuned on our community. We share like personal finance, how to grow, invest, and manage your money better. So you can stay tuned, connect with people, network with people, drop any financial tips or insights you have, drop it on the community. And let's just help each other do better with our finances, to be honest. Um, that will be all from me. And we also saw like a spike of people tuning in late. So this voice chat or this session was brought to you by Risevest. And if you don't know who or what Risevest is, Rice is an investment manager platform that helps you manage your money in several assets. So I'm going to be wrapping this up now. Any final words, David and Omolara?
Okay, so for me, I'll just say, we need to just continue investing in seeking knowledge. The laws have changed significantly, and we're likely to also see more and more updates from the tax authorities on how they will implement it. So we just need to keep our ears on the ground for that information as it comes. Also, as citizens, we have a responsibility as these taxes are being collected from us. There's sort of a social contract. There's the expectations we also have from our government. We need to keep them accountable to ensure that the funds are used properly. Thank you.
Thank you, David. Yeah, I agree with you on that. Omolara?
Oh, thank you. Wonderful time being here. Just to say that much more than ever, it's important to take tax planning and tax accountability seriously. So it's important to seek advice, get knowledge on what is expected from you, how you can plan your taxes, how you can save your taxes, so that at the end of the day, you don't have taxes eroding your entire income. And just get advice, seek advice, and the laws are new. The tax authorities are releasing regulations daily or alerts just to provide clarity. So keep seeking knowledge. All right. Thank you.
Thank you so much, Omolara, and thank you, David, also. So we've come to the end of this session, and I'm going to be ending this now. So this was recorded, and we should drop this sometime next week, hopefully. And for anyone that wants to listen to the recording or playbacks from anything you might have missed or you want to listen to. Also, it's however you think this session was for you. It's also appreciated if you drop your comment on the chat box. If you think this was insightful or educational, or you have more clarity now. You can as well drop that on the chat box. Thank you so much, guys. Thank you, Malaya. Thank you, David. Thank you to our listeners. Have a restful weekend and enjoy the rest of your evening. Bye, guys.